Hello everybody, a big warm welcome to my channel, Saver to Investor. So welcome to the channel that seeks to empower you all to save at least £3,000 a year, pay down debt and begin building wealth through investing. Now if that sounds like a vision you want to get on board with, then please feel free to like and subscribe to the channel. Now today's video is going to be about overcoming the fear of investing. Now, this is a subject that is dear to my heart. And the reason why is because I delayed investing for a whopping 9 years due to the fear of investing. So my fears were, I felt like I lacked knowledge. I didn't know what to invest in. I didn't know where to invest. And I was afraid of losing money. Now, I'm sure you'd all relate to at least one of those fears. So I hope that by the end of this video, you feel more confident to transition from a saver to investor. And the reason why is because historically, the investment markets produce a return on average of 10% returns. And you only have to look at the low dismal savings rates to see that investing is a winner against saving, because the average saving rate in the UK right now is less than 1%. I've seen savings rates as shockingly low as 0.01%. Now guys, savings are important, but unless you transition from a saver to investor, you are not going to be able to build and sustain long-term wealth and get your money working really hard for you so that one day you potentially don't have to work so hard for your money. So I'm going to share with you 3 things that allowed me to transition from a saver to investor. And these things empowered me to overcome my fear of investing. So here's a famous whiteboard, guys. So we're looking at overcoming the fear of investing. Now, these are examples based on my own personal experience. So I've been investing for just over 2.5 years. I'm a DIY investor and I also seek professional assistance from a qualified financial advisor. Now, these are 3 key things that allowed me to overcome the fear of investing. So number 1, I began small. So often people feel overwhelmed by the world of investing because they think you have to put lots of money into it and be wealthy. And that is a big misconception. I began investing £100 into several funds over around 6 months. And then as I got more confidence, I built up more money into them slowly. So I began investing with around £1,000. You can start off with a lot less. You can start with £100 or even less, because there's something called fractional shares. And fractional shares make investing extremely affordable and accessible, even if you are on a low income. For example, a Google share right now costs, as of September 2021, $2,850. Now, that's about £2,500. So if you don't have £2,500, you could buy a small portion of Google. So you may be able to afford, say, £10 or £20 or £30 or £100 or £1,000. So you can buy a portion of that Google share and you will still benefit from the price increases should it go up, and you'll still suffer the same losses should it go down. So fractional shares make investing extremely affordable, and they apply to both individual stocks and funds. So number 2, do not be alarmed by losses. So the key lesson here is there is risk when you take on the world of investing. You could potentially lose all your money, but provided you've done your due diligence and you have diversified your portfolio, there's no reason why you shouldn't get consistent wins over time. So the key point here is you need to have a long-term perspective when you're investing. So typically professionals say you should expect to stay invested for at least 3 to 5 years. And this is just so that you can iron out the ups and downs of the market. So have a long-term perspective and really do your due diligence before you do invest. Only invest what you're willing to lose. Number 3, this is a key point. It is begin with funds. So basically, When you invest in a fund, you're pretty much investing in several stocks that have been placed into a fund. For example, there's a fund called the SP 500. So what that means is when you invest into that particular index fund, you are investing in 500 companies. So let's say McDonald's is in that fund. If McDonald's doesn't do too well, you've got another 499 companies to compensate. So it's very unlikely that all of these companies are going to fail at the same time. So when you invest, you want to diversify and you want to lower your risk. So funds enable you to do that. So if you are a beginner, I would recommend that you avoid individual shares and invest in funds. And remember, guys, only invest in what you know. And fractional shares also apply to these funds. So it can be very cost effective to invest in funds. And remember, I'm going to repeat this again. You do not have to be wealthy to invest because fractional shares make investing very affordable. So guys, I hope you can see from these examples that investing doesn't have to be overwhelming. So these are 3 things that really empowered me to transition from a saver to investor. If you do feel you need more help investing, I'm soon going to announce a course that I'm going to be running alongside a qualified financial advisor, and it's basically designed to help you transition from a saver to investor by helping you to overcome the fear of investing. So I'll soon do a video on what we'll be offering in that particular course. If you have liked this video, please feel free to like and subscribe and to share to like-minded people. Take care, everyone. Bye for now.